is gold's true wealth. Everything else is essentially a form of debt, including our dollars, which is, again, our fiat system is maybe not even a form of debt, but maybe we could call it a line of credit. And that line of credit is dwindling, being eroded, not just through inflation, but through trust. And so there is a reason why the entire financial world is backing themselves with gold. It's for their own financial independence. When the largest financial institutions in the world need liquidity for whatever reason, they hold gold because they can sell gold. And so again, true wealth, no debt behind it.
Good afternoon, everyone. Thank you for joining us. Important update here. A hopeful message that even though the world's twisting the way it is, there's many ways to move through this. And that's what we want to talk about today. Got Jake Bell with me from Noble Gold Investments. And as the world spins, the news media is trying to fill you full of fear and hopelessness. But that is the opposite of what this world offers us right now in terms of opportunity. Crystal Ball for the Future is a history book looking back in the past and how did those through history protect themselves from these inflationary waves and just the restructuring of society and economy through history. It's always been metals. It's always been different ways to work through this, things that are tradable, things that are worth value in the next iteration of the world. We saw the COVID phase, our world, spun up in inflation, everything got repriced, everybody's used to that. And now we're coming into another huge inflationary wave where we're going up a full step again of how the world and your life's being repriced. So, Jake, appreciate you joining me. We're going to run through a few topics today, and the floor is yours.
Well, thanks, David. Nice to be here. And yeah, that's a very apt introduction. And one of the things I wanted to start with for your audience was talking about the global money supply. This sort of summarizes what you were just bringing up. We currently have $122 trillion of global money supply. That's up 17 trillion or 16% in the last 2 years. So it's no surprise that we are experiencing oppressive inflation still here in the middle of 2026. And I do see it as a continuation of COVID, the disastrous policies, the monetary policies that we were forced to endure. I mean, the situation presented itself. And so I think most of the public wants to look past it, and they underappreciate the magnitude of those decisions. Those decisions do not come and go. They are not water under the bridge. They take decades to play out. So again, it is in my viewpoint, seeing this as a continuation, the continued snowball of monetary issues and policies since essentially COVID.
And you could walk that back and say that was the Band-Aid from the 2008 and 9 financial crisis that got just rolled forward, and we're just dealing with it finally because you knew it was going to come back and rear its ugly head again. Now, just to say that those numbers are so incomprehensible for most people to put that many zeros behind it, it's mind-boggling. And then put the derivatives in there, and you're talking about quadrillions of dollars. For humans to see that many zeros, it's really, when you look at that many zeros, it doesn't make sense. But then our federal interest payments here, for anybody, on your tallying notes out there, 1.2 to 1.4 trillion. Add in the Social Security, the Medicare liabilities that we have moving forward with our full population in America, takes us over 4 trillion. I just don't know how we're going to afford that unless they print more.
It doesn't add up, does it, David? It just doesn't add up. And it's no wonder why this administration wants lower interest rates. I mean, that's what we've been calling for. And this is a good transition into just last week, Warsh was confirmed by the Senate to be the new Fed chair. And this has been a curious point for me because Warsh is a hawk. He is a historic hawk. And what that basically means is he likes tighter monetary policy. He wants higher interest rates to protect the value of the dollar. Well, where are these two dynamics going to come to a head? He was obviously appointed by Trump. Trump wants lower interest rates. And I think the main reason Trump wants lower interest rates is for what you just said. The national interest, the debt that we have, these liabilities that we have looming over us, A secondary factor, an important one, would obviously be the housing market. But again, here we are dealing with this record inflation. It's not going anywhere. Monetary policies of the previous administration and the current administration have exacerbated that. So how is this lifelong monetary hawk going to come in and lower interest rates while we're dealing with inflation? Where there's a big push and pull game here happening, David. And I don't know how it ends smoothly or peacefully. There has to be something that breaks, something that gives, because as you were just alluding to, that $4 trillion in liability, where does it add up? How do we come to that conclusion?
That's something to think about, because Japan's dumping a tremendous amount of bonds. China is at the lowest holdings. And, I'm here in Asia right now. So this is in our front page newspapers about Japan's in a huge financial crisis. The fire sale there. So think about that. The bonds that were at whatever percent they had, they're selling them now on the open market at a discount. People are swooping that up and say, why would I buy American bonds at 5 if I can get something at a discount? Now we're going to have to offer a higher rate at 5.5, 6 to draw people back in on that. It doesn't make sense. There's so much selling going on, and the tidal wave of money coming back to America and those people out here in the world that do not want or can find something on a secondary market at a discount. Why would you pay full price for something if I can get it at a discount? It just doesn't make sense. Again, the math on any of this doesn't add up. They want lower interest rates. Well, you're already over 5, and a lot of things start breaking at 5. It's like duct tape and baling wire holding it all together with a bunch of media manipulation and half-truths to get you to believe that the system is still functional. I really believe we're at a precipice, like, some of those movies you've seen where the car drives off the cliff and it's still in midair, and you haven't made contact with the ground yet, but we're there.
There we are. Yeah, that's a very nice metaphor to use. And what you're touching on is a huge point that's going on in the global scale. The most macroeconomic environment is a de-dollarization process. The debt, not just obviously the US is the center of the world financial system, but the trust between nations and buying sovereign debt has been eroding for years. Obviously, COVID played a big part in it. But the freezing of Russia's assets in 2022 over the Ukraine war was another big part of it. And so we do have mass selling and a lowered appetite of sovereign debt. And guess what? This is a two-pronged conversation, because not only is there the de-dollarization process happening all over the world, what are these countries, what are these central banks doing instead? They're, of course, buying precious metals at a record pace. They've been net buyers every month, every quarter, every year since COVID.
Yeah, you sent me a quick statistic over here, which I knew there was a lot of buying going on in central banks, but you said 1,082 tons in 2022, 2023, nearly the same, 1,045 tons in 2024. So that's the third year above 1,000 tons as central bank buying. And now we got all, in Asia, it's very much people hold small amounts of gold and silver as they're saving in nest egg. Now, Southeast Asia is more on the silver side. Northern Asia is more on the gold side. And then all of a sudden we got Tether jumping in, and all these companies that are going to be issuing stable coins are buying up the gold too, so they can have something behind that as a gold-backed issuance. So everywhere you look, the messaging is the entire world's financial system's buying gold, but you're being told not to, that it's an archaic relic. Well, again, I will say, everybody, please pick up a history book and see how valuable and how used it was during these tumultuous times as things hyperinflate away. I'm really a fan of going back to the Weimar Germany time and looking to see how people dispensed with their metals or didn't, what was traded for food at that time or what wasn't. And you'll actually shake your head sitting there for an hour after you close the book going, is that even possible? How could you get that much for one small piece of metal, for one small ounce, 1/10 ounce of gold, one ounce of silver? You're telling me you could buy an entire city block for like 6 ounces of gold? A city block, not a house, a full city block. And this is the only thing that's going to protect us moving through, just your regular commodities, food, that sort of thing. But you're going to have something to trade and barter in between that. And if you can't carry a grand piano with you to trade a farmer a bunch of bushels of wheat, you're going to have something more mobile. And then, just look back through history. And this is really what's going to keep us protected moving forward here. I could be wrong. That's just my opinion. You can agree or disagree with that.
Well, hopefully it doesn't come to that. But there is something to be said. The underlying truth that is undeniable is gold's true wealth. Everything else is essentially a form of debt, including our dollars, which is, again, our fiat system is maybe not even a form of debt, but maybe we could call it a line of credit. And that line of credit is dwindling, being eroded, not just through inflation, but through trust. And so there is a reason why the entire financial world is backing themselves with gold. It's for their own financial independence. Gold is a tier one asset, and there are very few tier one assets. And it's really the only tier one asset that has been an acquisition over the last several years. And one of the defining factors of a tier one asset is its highly liquid state. And the reason why gold is the favorite of central banks and governments is because there's no shareholder. There's no controlling institution. There's no controlling body. And because there's no shareholder, there's no one to pay off. It's true wealth. You can sell it anywhere in the world. In fact, the only two countries I think that have been liquidating in last couple months, I know one was Russia, and it's to pay for the ongoing war. And that might not be a pleasant thing to discuss, but it makes the point is that when the largest financial institutions in the world need liquidity for whatever reason, they hold gold because they can sell gold. And so again, true wealth, no debt behind it. That's important, and that's why it's happening.
Now, let me ask you a question, because I heard it stated that the reason some of the gold prices were depressed a little bit comparatively to where they were at the highs just a few months back was what you just said. During this Middle East conflict, a lot of these countries that relied on oil revenue coming out of the Middle East don't have their oil revenue because they're stuck behind the Hormuz blockade. So they decided to liquidate the easiest world-class tier one asset, gold, so they can continue their operations. So a lot of gold flooded the market because that was the easiest low-hanging fruit to get out there to get some liquidity into their markets. Is that a fair assessment, or am I off on that?
Indeed. I think it's a partial truth. I think the ebb and flow of the precious metal market, there are dozens, if not hundreds, of narratives being played simultaneously. And each one has a varying degree of importance. And that's a pretty important one. When 300 tons are sold into the open market to help pay to cover a nation's sovereignty, whether it be in the Gulf states or whether it be in Russia, that will balance the market, and we could see ups and downs. I've never taken the pullback that we're experiencing as a negative. And let me remind your audience of something. We are in a bull run. We are in an 8-year bull cycle. We're in year 3 or 4, depending on what metric you want to use of that 8-year bull cycle. The definition of a bull market is higher highs and higher lows. It's not a straight line. So there's always going to be ups and downs in any market, but the trajectory, the long-term outlook, that path has been paved, and it started all the way back in 2020. But again, you could go back to the previous administration's spending packages. There were several, 3 of which were over $1 trillion. Spending packages continue to devalue the dollar. So that is a completely different narrative, and I think a bigger one, and one that has paved the path for gold to go up significantly higher, silver as well, platinum likely as well. But the liquidation, the short-term ups and downs of this has been a very odd financial year. That first quarter was crazy, and this second quarter isn't shaping up to slow down in any way. So there's a lot of things up and downing this market, but again, zoom out, keep that 30,000-foot view, and look at what the largest financial institutions are doing. They are buying precious metals every month, And it's not a speculative bet. They know where this is going, and they know that they need it.
Yeah, that's true. I don't know if it was J.P. Morgan or somewhere Goldman Sachs. They were calling 6,300 gold coming up by the end of the year. So, a lot of forecasters are also with that big money. You're talking those top players in there, and different nations are also calling for the same thing. So if we're at what 4,500 now, it's 63 continuing up. Like, where do you see the ultimate end? I'm not going to put your feet to the fire, but do you see above 10,000 at the end of the run here before everything stabilizes? Because we are coming in, I'm going to use the word reset here. Something is going to break, and the monetary system is going to have something behind it that people believe in versus just my word. Just believe us. That's not going to be believable anymore. People are going to have to see something. And I'm really wondering, with this real world asset and tokenization moving along, and a base of it, with gold at that digitized format, if it's going to be some combination of this moving forward, you have to have some believability behind it once this thing resets on itself.
I have two answers to your question, and I really love the way you phrased that, David. So thank you for that. So if there is not any sort of major reset, which I do think that's in play, I don't know exactly what that's going to look like. I have a couple theories that you might call me a tinfoil hatter, but I'll leave that aside for now. If there is not a financial reset, I think the path for gold is to double from its current valuation. I think $9,000 to $10,000 an ounce for the next couple of years is exactly where it's headed. I do not pull that number out of thin air. You could, for example, go to the USDebtClock.org. And I don't know if any of your audience has ever gone there, but that is something very interesting. Bunch of different hamster wheels showing where our dollars are going, where it's coming in, how it's being spent. And over on the right side, it shows a dollar to gold valuation as well as a dollar to silver valuation. And this was predicated back on when we were on the gold standard. And that has gold, last I looked, at $9,700 an ounce. So I do think that's where we're going. I think the devaluation of our dollar, again, monetary policies put in play, have put us on that trajectory. Now, if there is a revaluation, which there was talk of that in the big, beautiful bill, you see it with Tether, with the policies put in place for stable currencies and how it's going to be intertwined with our sovereign wealth fund. We see it with central bank and government buying. If there is something truly dramatic where our financial system is completely reworked, it is undoubtedly going to be semi gold backed. I say that semi because it's not going to be the same way. We cannot have a one-to-one pegging as we had pre-1973. Yes, there was bad when we got off the gold system, but there was also good. We simply needed more flexibility. So that direct, I want to be very clear and very careful when I say gold-backed system. I do not mean the one that we were on before 1973. But we need a tether to reality. And if something dramatic were to happen, if some major fiscal and monetary shift takes place and fundamentally changes our financial system, the outlook for gold and silver is exponentially higher than what I just gave you.
I should say, I'll just pull out my electromagnets and pull your tinfoil hat back right here, because you piqued my interest. I would like to know what your thoughts are, because I'm open to all ideas. And I think a lot of what people are thinking is, I don't know if it's intuitively that we're tapping into something that we're all feeling of, and I'm going to use the word vibrational shift because we're talking about frequencies and different changes. Especially, I follow magnetic field and solar changes as a driver for these ebbs and flows of civilization rises and civilization falls. It's all about food production. Calories is the most important energy unit to measure. We can measure oil barrels and cubic meters of gas, and that's nothing. Calories are the most important energy unit. So when you go back to, I'd like to hear your idea on the tin side there.
Okay, very good. Well, I lay no claim to this math. This was one of our other influencers who did it. But basically, what is the purpose for a nation holding gold? It is to back our debt. It is to tell other nations that, hey, we are good for our debt. Please buy our treasuries. We'll pay you back. And of course, obviously inflation has ruined that narrative, and there's a reason why the shift is happening. But if you do the math and you take our outstanding debt versus the number of ounces that we're supposed to have, Fort Knox, another story for another time. Well, that would basically put gold upwards of $27,000, $30,000 an ounce. So that's happened before. When the revaluation occurred, there's historical precedence to that. Now, that was a different time, different economy, different world, fair enough. I'm not necessarily making this claim, but you could see the path forward. It's not entirely crystal clear, but the purpose of gold in a nation's reserve is to back our debt. And we have this absorbent amount of debt. And if gold were to be the easy button, the click, because if we did that, I mean, that is the easy button lingering behind the surface. If we simply revalue our gold, all of a sudden our balance sheet is inverted and we're not in this we're not being repressed, we're not being drowned by our outstanding liabilities. And so it is an interesting thing to consider because there's a lot of benefit to it. Now, there would be fallout. Nothing's I'm not talking about sunshine and rainbows all the way through, but a true revaluation, a reset. And if again, there's a dozen different ways to where that could come to fruition. If we do experience that, it is very likely, if not probable, that gold and silver will get revalued to the nth degree. Now, again, my prediction for you, taking my tinfoil hat off, is I think gold's going to double. I think silver is going to do exponentially better than that over the next couple of years within this bull cycle. And if something dramatic stacks on top of that conversation and causes it to go up even further, hey, great. I'm going to be positioned well. But I think I'll end that rant on that note right there.
Let me follow you up with that question then. If it does go, let's say to 30,000, just hypothetical, just a scenario here we're talking through. If it does, that is going to be a tremendous amount of inflation, or are we going to wind back the clock to right at the beginning of the Federal Reserve where you could get a can of soup for 10 cents because it was metals backed? Because we used to be on the bimetallic system anyway. It's 1850s, and then we went off that bimetallic system and went to a gold system. That was the first step of taking us off sound money, was removing at least one of the metals. But at that time with inflation, say, before pre-1913, can of soup was 10 cents. So if we're going to be gold backed or metals backed again, would that cut the inflation, or would that run away into hyperinflation based on that valuation of gold? And silver as well. That's going to track whatever the gold ratio is, gold-silver ratio.
I think it would be the second. I think it would be a result of hyperinflation. Let's zoom out one further step here. The point of gold and silver is the fact that it has intrinsic value. And I'll make this same point with home values. We obviously saw home values skyrocket over the last 5 or 6 years. Has the intrinsic value of metals, of home, of gas, of beef, of your groceries, have the intrinsic value of any of these items gone up? No. It is simply the value that we associated with the dollar. And that's inflation. That's exactly what inflation is. It's not that if we see that system, I interpret it as a response to a plummeting fiat system. Not that not that gold's going to go up in intrinsic value. Gold's going to maintain its intrinsic value. That's my answer to that question. Now, as a sidestep, silver becomes a little bit different because that same dynamic plays for silver. It has intrinsic value. It will maintain its intrinsic value against a devaluating dollar. However, silver has an industrial usage that we have to have. Silver, our entire future is being built off of silver, and we don't have enough of it, which is again why I'm more bullish on silver, because I believe its intrinsic value is going to grow. It's going to go up because of the devaluation of our dollar, but we have to have it. And so when we see silver go up, it's the opposite answer of what I gave you for gold. If gold goes to $30,000 an ounce, it's because the system in place has collapsed. If silver outperforms gold over the next several years, which I expect it to, it's going to be because of monetary issues, but it's going to be mostly because of the demand that we have to have it. We need that metal for everything.
Yeah, which nation needs it more? I mean, China, and I wanted to tag on this for a second. The administration's trip over to China is occurring at the same time as, when I say record silver buying in China, it's not, okay, it was a little bit more than last year. It's literally exponentially more in terms of magnitude. If it was at a 1, they're buying at a 7, something this far up. They're taking the entire world's supply of metals off the market in less than a year in terms of mining capacity. Like, whatever's happening with China, I don't know if that was part of the talks. Like, you all can't buy the entire world's supply of silver and pay $7 or $8 over per ounce to get it into your country. Something's going on there as well, where this difference, maybe you want to talk about this as well, because the difference in metals pricing out here in Asia is quite a bit different what we're seeing in Europe or the United States. It's substantially more out here. Now, in a real world and in a beautiful world, you could get an airplane and load it up every day and then fly it out here and make a couple $100,000 and fly back and then load up the plane again. But it just doesn't work like that. That being said, the Shanghai Gold Exchange is over here, and the pricing is very different, very different.
The arbitrage is absurd, and it's been that way for over a year now. And there is an ever growing divergence from the paper market versus the physical market. And that's, the paper market has been a game that's been manipulated and twisted for years. A lot of people think I have a tinfoil hat on, but for your viewers, if they're ever curious, look up JP Morgan 2020 spoofing case. 3 people went to prison because of nefarious trading techniques for both U.S. Treasuries, but also the silver market. So that manipulation of the paper market does happen. And we've been concerned over that for years, and it's only gotten worse. So if you're looking into precious metals, by the way, it's ownership of the real asset. That's the real important thing. But let me get back to China here. Or actually, one more point before I talk about that China trip. To build off what you were just saying, about a month and a half ago, the current administration announced plans for a silver price floor. This is very important. Now, I heard that, and I had a knee-jerk reaction, David, and I did not like it. Hey, government, back off. Silver doesn't need your help. Usually government intervention doesn't do the good it intended, and usually has several fallouts that make the situation worse. But when I dug into it, it made perfect sense. Why would we implement a silver price floor? Well, it is to protect our US-based miners. Most of the silver production in the world does come from China. There's a big chunk of it in Mexico. It is outside of the United States. Our nation needs to be sovereign. We have to have our independence, and that means supply chains as well. And silver is probably the biggest one. Implementing a silver price floor is going to give US-based miners a safety net to go after it. Silver's been so kneecapped for the last 6 decades, essentially, that it's utterly unprofitable for miners to go after. Most of the silver production of our world is a byproduct of other mines, and that has to stop. This is the 6th consecutive year of deficit, of a structural deficit, and that's not going away. There's more silver being used than is being pulled out of the ground. And there's a reason why this administration last November put silver on the critical mineral list for the first time ever. We have to have this metal, and we don't have enough. The current trip, or the trip that just ended with Trump going over to China, I have a little list here that I just want to read off real quick. So there was some common ground established. Both President Xi and President Trump said Iran should have no nuclear capability. They both said openly that the Strait of Hormuz needs to be open. There should be no toll for that. a third of the world's oil runs through that little bottleneck, and that will shut down everything otherwise. They have both agreed to the denuclearization of North Korea. That seems difficult. Good luck with that. They established the Board of Trade and a Board of Investment. That kind of seems like a filler announcement, which I'll circle back to in a moment. It's basically just a line of communication, which they essentially already had, but hopefully it comes to fruition. Nothing, I'll leave it there. It's a line of communication. We'll see what comes out of that. Now, there were some deals made. There was a rare earth supply chain deal made, pretty vague, no real details behind that. There was an agreement by China to buy 200 Boeing aircraft. Okay, that's nice. There was an agreement by China to buy $17 billion of U.S. agriculture per year, basically soybeans, beef, and poultry. Good things, good for our farmers. Trump likes that. But compared to his previous diplomatic visits, and I'm thinking about the Gulf nations last year, where there were trillions of dollars of investments made in that deal, this trip lacked a little sizzle. And remember, he brought the all-star cast of U.S.-based companies. He brought Musk and Cook and Jensen to be at that table with him, to be a part of those negotiations. He didn't bring those three gentlemen plus others for some agriculture deals. To me, the way I read these announcements was a loss. I don't think Trump got what he wanted going over there. And I think the stock market's reaction to that over the last week and a half essentially really paints the full picture. The stock market did not enjoy a good week after Trump's return. For whether your audience hates or enjoys his rhetoric, he is a painfully candid person, right? To a fault. Trump says what's on his mind immediately. There's no filter there. And his responses to the questions asked upon his return were unusually vague. And so again, I don't take this as a good trip. I don't think this was successful in the nature that he wanted it to be. Does that make sense?
Yeah, it does. And I wonder what's happening with this $26.3 billion by the Federal Reserve starting to inject next Monday, if it's related to that at all. And again, what does that lead to? More inflation. Can't tell me that all this money is going to get forced into the markets just because our government is trying to make our market go back up with sort of secret quantitative easing of such. But now they've announced it. So next Monday, it's going to be 3 consecutive weeks. They didn't, they precisely tell you which or how much money for each week, but 3 consecutive weeks injection. All I see is inflation. So something doesn't seem to be right. I don't think they would need this rescue package had all these meetings gone wonderfully.
Yeah, we have to have sustained record growth to get out of our hole. We are, again, going back to the beginning of our conversation here, David, we have a huge amount of liability as a nation. And the one option was to cut spending. Well, that, we were all hopeful, I think, with Doge to be a little more effective, and that was just basically nothing burger. And so cutting spending is just not there. We are forever a debt-based economy. And so now our only option is to grow out of it. And we need interdependency to grow on. And again, I don't interpret this trip as being what the administration hoped to get out of it. And so if I may, I'd like to close on this, David. I look at this world of interdependency, of fluctuation, of change, of volatility, and I think about my children and I think about the rest of the world. And the one thing I don't want my children to be a part of is a forever cycle of debt. I don't want them to be debt slaves. I want them to have not just independence, but financial independence. And to me, that's the forefront of what everyone should be asking themselves. And the questions that I asked myself a long time ago, which led me to where I'm at today is what percentage of my wealth do I own by myself? What percentage of my portfolio is not a debt-based instrument? How much of my wealth is dependent, has a counterparty risk for the world that we live in? And having these instruments, having stocks and bonds and maybe a CD here or there, they serve their purpose. But what portion of your portfolio do you own by yourself? What portion of your wealth is indeed true wealth and not a form of debt?
That'd be good for everybody to do an assessment on that in their own lives, whether it be gold and silver, or whether it be something like tools, seeds, skills, anything that can't be locked or, bailed in. Well, what do you have around in your periphery, or, in your life to protect your family? As you being head of a household, whoever you are listening out there, that's your responsibility to take care of your families. And the writing's on the wall currently of what's happening. So it's time to get serious, buckle down, and really look into these plans for, financial independence, but at the same time protecting and holding through this storm. And on the other side, then, as it resets, if you're holding on to certain assets, when it does reset, those are going to be the base of the new economy. And suddenly you're just going to start not even from scratch. You're already going to have so many legs up, and you'll just walk through. Okay, thank you. Just start again here. And that's the way we go. Jake Bell, Noble Gold Investments, thank you for joining me and let me twist your ear for a couple minutes there. And any last thought you want to leave here?
No, I had a lot of fun, David. Thank you. Hopefully your audience enjoyed it. And if they did, they can call us. They can call me. I'm going back to work right now. Our number at Noble Gold is 877-646-5347. David, I hope to do this again with you.
Please leave your comments below. I'll go ahead and read those. Anything of interest, I'll pass over to Jake, but I'm also interested in what you all thought of our conversation and any of your ideas that we haven't spoken about. So next time we'll have some more ideas to continue the conversation. See you next time. Bye for now.